Hey guys, hello and welcome to this YouTube series. I'm Manisha Gupta, and the spotlight today is absolutely on China, which has been the mover and shaker in case of commodity prices. First, the reason the prices went up so high, and then the prices when they heated up too much, and the Chinese manufacturing companies started to take a hit on their margins. China started ensuring by way of measures, by way of warnings, and by way of action as well to ensure that the commodity prices came down. I want to first of all list out 10 commodities which get a direct impact from China just by the scale that China has in sense of production or consumption in these commodities. The crude oil prices first, and the China is the top importer and second largest consumer when it comes to crude oil. Copper, well, 50% of world consumption happens from China. Aluminum, China is the world's top aluminum producer as well as consumer. Zinc, China consumed 50% of global consumption of zinc in 2020. When it comes to coal, well, China is the world's biggest coal miner and consumer as well. When it comes to iron ore, well, China is the world's largest producer of steel and the largest consumer of iron ore as well. Pork, well, China is the top pork consumer and importer when it comes to the global markets. And some of these agri commodities as well take a direct impact from China. Soybean, for example, and China is the world's top consumer and importer of soybean. Corn, China is the world's second largest consumer of corn after US. And then wheat is the 10th commodity I want to take a look at today. And China is the top wheat consumer. One fifth of wheat consumption comes in from China. And well, the prices started making all-time highs, multi-year highs in the month of March, and then April, and then the month of May as well. But it was as early as 20th of April. This was the first time in this year that China said that the prices of commodities are heating up and that they started issuing warnings as far as speculation. And they encouraged the smelters and fabricators to hedge on futures market given the way that the commodity prices were rising. But it was as early as 11th of May that China said, and they also started with thermal coal, and they said that the spot prices had surged 20% within a month. And this is the time that China started getting stricter in its statements as well. But even with that, the prices were hitting all-time highs in the month of May as well. So whether it was coal, iron ore, steel, copper, soybeans, palm oil, all of these commodities were still surging is the reason China started to make its statement even stronger. China actually told, the coal producers, publications, and agriculture data providers to stop and suspend operations and not publish commodity prices to ensure that there is no speculation or manipulation in these. So the information to begin with was stopped from being given out in sense of the spot markets there. And then price gouging, collusions, irregularities, all of that is what China started to address with its statements on almost a daily basis. It was almost in mid of May that China said that they are looking to stabilize and take measures in sense of iron ore and steel markets. This was the time that we saw all-time highs in both of these commodities. China raised margins, it put trading limits, it stopped publications when it came to many of these commodity prices. It also told its producers to increase production. It started sending out investigation teams on ground to ensure spot markets as well. So the futures on one side was being taken care of, and on the other side, China was ensuring investigations. It was sending in inspectors out to ensure that there was no illicit hoardings onto the spot markets there. Also, when it came to warnings that were on a daily basis, China told the metal companies to not drive up prices, especially when it came to copper, steel, iron ore, etc. And to strengthen the structural changes here, China also included much of this in its 2021 to 2025, the 5-year plan that China comes out with. China also said that they are putting in price controls within this also, and they're monitoring, they're analyzing commodity prices such as crude, natural gas, soybean, copper, corn, and other major commodities as well. So China continued to do this on a daily basis here. And then the major step that China took was on 26th of May when China banking regulator told banks that they will not sell commodity linked products to retail buyers. So, as I said, with every single day, every week, China was ensuring that they were putting in stringent measures to ensure that the prices were not going higher and that the retail buyers also were saved away from the kind of volatility that the commodity prices were putting forth. And then China also in the month of June ensured that on a regular basis, inspectors were visiting major coal hubs. They were also doing the same thing for various other commodities also. So warnings, investigations, releasing metals also came in the month of June itself, when the National Food and Strategic Reserve Administration said that they will be releasing copper, aluminum, and zinc via public auction directly to the companies who needed these metals. And then these companies were told not to hoard, not to resell these commodities, and that they had to immediately start using these commodities if they bought it via the National Reserve auctions. The sale from national reserves also happened for the first time in almost a decade. And it wasn't just about the industrial commodities, because China also started working in sense of other commodities like coal. They started making a buffer stock for these commodities and started releasing it via auctions as well. And then it was about pork. China also started buying pork because we saw the prices decline by 65% since the month of Jan. So they started buying it from the markets, and they started doing it on 4th of July, 9th of July, 18th of July, when China started putting out numbers on how much they were picking up from the markets there. So while we have seen two national reserve auctions in sense of metals like copper, aluminum, and zinc, China has been buying from the markets also. China has said that they are making more and more structural warehouses to ensure that they are buying more agricultural commodities to ensure that there is no shortage, that there is no run up in prices. So even as we have seen many of the commodity prices actually come off their all-time highs, commodities like copper, aluminum, zinc, soybean, palm, wheat are off their highs that we saw in the first half of this year. The markets do believe that the way that China is working in many of these commodities for the second half, well, yes, the prices may stay off the highs that we've seen. We may not see a repeat performance for many of these commodity prices, but it's going to be quite interesting to see on what China does. As latest as this week, China has said that nearly 48 cases of abnormal trading behavior in the month of July is what they are looking at right now. So, well, yes, China is working, and the markets will continue to keep an eye out on what China continues to do moving forward.